What if you could invest in global stocks from India and legally pay zero capital gains tax?
Hey everyone, and welcome. Today, we're going to demystify a really powerful way for you to invest internationally, right from here in India. We're going to break down exactly how you can use something called Gift City to grow your wealth on the global stage. So, as a financial advisor, I hear the same stories all the time. You find a fantastic investment opportunity overseas, you make a really solid return, and then, bam, you get hit with capital gains tax. And on top of that, you're always kind of looking over your shoulder at the currency exchange rate, right? The whole rupee versus dollar fluctuation adds this whole other layer of risk. It can make the entire thing feel way more complicated than it needs to be. Sound familiar? All right, so here's our game plan for today. We'll start with the headaches, then introduce the solution, which is Gift City. We'll talk about that incredible zero tax advantage, walk through how to make your first investment, compare your two main options, and then we'll figure out if Gift City is the right move for you. Okay, so first things first. Before we get to the solution, let's really nail down the problems we're trying to solve here. Understanding the why makes the how so much more powerful. When you invest overseas, there are really two big elephants in the room. First, the tax man. Capital gains taxes can take a serious bite out of your hard-earned profits. And second, there's that currency roller coaster. Look, sometimes a weakening rupee can actually help your returns, but a strengthening one can wipe out your gains just as fast. It just adds a whole layer of complexity that honestly nobody wants to deal with. All right, so we've laid out the problems. But what if I told you there's a place, a hub, specifically designed to tackle exactly these issues? Well, that's where Gudra International Finance Tech City, or as we all know it, Gift City, comes into play. So what exactly is GIF City? The easiest way to think about it is this. It's a special zone right here in India that, for financial purposes, basically operates like a foreign country. It's what's called an International Financial Services Center, or an IFSC. The whole point was to make it much, much easier for people like us to invest internationally, letting you deal directly in foreign currencies like the US dollar and just sidestep a lot of those traditional headaches. And this right here brings us to the single biggest reason people are getting so excited about Gift City. It's a true game changer for your portfolio's growth potential. Yep, you are seeing that right. Zero. Zilch. Nada. We are talking about 0% capital gains tax on investments you make through Gift City. That's a huge deal. Any profit you make when your stocks or funds go up in value is completely tax-free. Every last bit of that return is yours to keep. Okay, so I know what you're thinking. This sounds incredible, but it's gotta be complicated to set up, right? Well, not really. Let's walk through the actual steps. You'll see it's probably more straightforward than you think. It's basically a four-step process. First, you open an account that's in US dollars with a bank in Gift City. Simple enough. Second, you choose your team. That means a registered broker or a fund manager who operates there. Third, you put money in the account. You do this through the RBI's Liberalized Remittance Scheme, or LRS. And finally, the fun part. You actually pick your investments. Stocks, bonds, funds, you name it. All right, so your account is set up, it's funded, and you're ready to go. Now what? Well, you've basically got two main paths you can go down, and understanding the difference is really key to making it work for you. This is where it comes down to what kind of investor you are. You have to ask yourself, am I more of a set-it-and-forget-it person who wants a simple, diversified approach, or am I more hands-on, someone who wants to be in the driver's seat, picking every single stock? There's no wrong answer, but it really depends on you. So let's look at the trade-offs. On one side, you have mutual funds, or what are called alternative investment funds, or AIFs. This is the simpler path, for sure, especially if you're just starting out. You get instant diversification, and the fund manager does all the heavy lifting for you. Then on the other side, you've got direct investing. This is where you call the shots. You pick the stocks, you pick the bonds. It gives you a ton of control, but, it also means you've got to do your homework. Okay, we have covered a lot of ground. We've talked about the what, the why, and the how. So let's bring it all home and answer the most important question. Is this the right move for your portfolio? So, to recap the highlights, let's do a quick rundown. Number one, and this is the big one, invest globally with zero capital gains tax. Number two, your investments are in US dollars, which is a great hedge against the rupee weakening. Number three, you've got options. You can go with diversified funds or pick stocks yourself. And finally, and this is super important, you have complete liquidity. You can sell whenever you want. So I want to leave you at this final thought. The tax advantage, it's clear. It's powerful, it's fantastic, but you have to remember you are still investing in global markets. And that comes with its own set of risks. So the crucial question you have to ask yourself, honestly, is this: does taking on that international market risk actually fit in with my long-term financial plan? Because answering that, that's the key to your whole journey.
If you found this useful, make sure to like this video for more gift city investing, global portfolio strategies, and tax-free investment insights for India.